In just 16 minutes, I'll go over my full daily trading plan and routine that made me profitable, and I'll go over all the details that you might need from the moment I open the chart, as well as an example of the trades that I took using the same trading plan. If you're not willing to spend 16 minutes of your time to understand how to make money off trading, then you're not really serious about trading. Anyway, let's get into it. We're going to be starting with daily routine and the trading plan. As you can see, this is everything that I look at every day when I start my trading session. So the first thing you'll do here is keep it simple and sticking to the plan. And why is that? Because when we don't have a trading plan, we're going to do this, come to the chart and literally see nothing. Why? Because all you see is confusion. All you see is everything together. And there's nothing specific that you can focus on and execute based on that. This is why we need the trading plan. It clears the confusion. That's the first thing, so you see no confusion. And the second thing is tells you when to pull the trigger, right? So we understand that when this happens, we do this. When we have this, we do that. If, then, that. So like coding. That's why we need a trading plan. Otherwise, if you have a discretionary way of trading where you go and then do whatever the market offers you, it might work for some people, but not everyone. And the main goal of the whole trading plan is to be catching the expansion of the daily candle. So we understand that we have a big daily candle, and I'll be executing on the 15-minute time frame. So that's why I need to be involved with the 4-hour and the daily candle. And I really want to catch the major part of the daily candle. So now what we're going to do first is look at the time-based levels, and then go over the POIs, and then go over the time frame management. You know, how about we start with the time frame management so we can have an understanding of the others. So time frame alignment is 2 time frames to trade off for the day. You can go 1 weekly 4-hour, daily 1 hour, 1 hour 5 minutes, or 15 minutes 1 minute. Now when you go for up to down, the frequency goes higher and you go to a lower time frame, so you have more trades here, and it takes less time for the trades to actually reach the take profits. Or more has the swing trader. The time frame that I'll be picking for today's trading and for my trading plan and for my routine is 4-hour 15 minutes. So this is my time frame alignment, the 2 time frames I use. So what we're going to be used first is go to the time-based levels. So there are specific levels on the chart that I'll be marking every day, and it's going to give me an indication of something. So the first one is the midnight open. As we talked about, this is a very important level. So we're going to be marking the opening price at midnight and the opening price at this candle. We're going to drag it to the right, and then, so if we have the price above, we go short, price below, we go long. And it's not always the case, but we have an 80 percentile on this one. We need to have some confluences with this, but it's a filter, you know, at the end. So you have your opportunity, and I'm going to make sure it's in the right zone, in the right spot. And then you look for the midnight open, and you see you're above or below. And then if you're looking for shorts, then maybe look for shorts above the opening. Same thing applies for the daily candle open at 1700 EST, New York opening price. So apply the same logic here. So the most important level in this case is the range. As you guys know already, I hope, there's a whole strategist around this, and it's one of the most important plans that I actually I'm using, and it's going to be marking the agent range. It's the price action, you know, the highest high and the lowest low in this timing between 8:20 EST and midnight EST. The range from those times, the highest highs and the lowest low. We mark that, and we look at this because it's a whole framework, right? So we have a reaction of a higher time frame level. That's when it comes to the agent range. So if we have a high, for example, a high time frame level, and it drops lower, then there's a reaction, and a big one, and normally it's followed by a market structure shift. So then we look for a continuation. So we got a reaction from a high, and then we broke lower, look for continuation. Continuation means we're going to be looking for more short opportunities. So 2 ways we look for continuation. One is OTE, optimal trade entry, so Fibonacci at that price range, and then look for reaction of any of the fib levels, or the other option is when it comes to PD arrays. So if we have the fair value gap that is part of the agent range, and we already have a reaction of a higher time frame less, we can look for continuation from there. The other scenario is we have no reaction of a higher time frame level, and there's a major liquidity above or below. So in this case, what we're going to be looking for is look for reversal, and we look for manipulation, which is a liquidity sweep above or below the agent range, and then we enter from. And the same logic applies on the agent range, uses the same framework, and then we're going to apply the same project. So price below the agent range, then we're going to go for a long. Price above the agent range, we're going to go for a short. So that's the first thing. Time-based levels, we should always have those in your chart every day. So give you a manual mapping of this level and what are they going to do above or below that level. It's going to give you a good indication of what the market's going to do. So now daily open candles pretty much with the POIs. So when it comes to the POIs, that's the other thing that I currently do based on the time frame that I'm currently in, 4 hours in this case, in 15 minutes. But you can adjust it to your own way, to your own double slots of hours. But in this case, 15 minutes and 1 minute is going to be the same trading plan. Now 4 hour plus or minus means that sometimes I can go to 1 hour if there is something that is more clear. Same thing for the 15 minutes. I can go 5 minutes or 3 minutes if I see that something, a more clear picture of what currently allows me to understand from it. The 4 hour I'm going to do is only look for these 4 things. And it's going to be limited to going to be only these PD arrays or POIs. No, you can actually look for whatever you want. But for me, I prefer for BPR, balanced price range, which are, if you're not familiar with, 2 fair value gaps overlapping each other. And I have going to do a new video about that. I'm going to look at 4 value gaps, and I'm looking for high probability fair value gaps. I'm going to do another video on that. And then we have order blocks, up and down close candles. So because those are very high probability POIs, you can actually, have a reversal from there, from those order blocks. And then finally is the recent quick picture of the recent structure, right? So do we have a recent break of structure that is clear? If we have, then we can identify what? A trend. So we got a market structure shift. Going to identify the trend from there. We're going to approach that is we always follow the recent break of structure or the recent market structure shift, and that's pretty much likely to be the most market for the day. After the 4 hour, we go to the 15 minute. And 15 minute here means that the reaction of any of those PD arrays or POIs or place hours inside of any of those, we go to 15 minute. And what we'll look for is a confirmation. So price reaching that level, it doesn't mean that we trade immediately, right? But we will wait for a confirmation within this. We have 2 types of confirmation. First one is creation of a fair value gap. What I want to see is the price creating a fair value gap or that 4 hour or BPR or any of the PD arrays. The other confirmation is that the change in state delivery, which is pretty much engulfing the latest bullish or bearish candle, and that's the creation of an order block. So, and if I say that this is all I look for, this is the whole trading plan, guys, this is the whole trading routine that I'll do every day that make me profitable, and keeping it simple, structured, and with rules. Learn a lot of stuff, but maximizing the learning curve, the time that actually takes to digest. If you need to learn 15 languages in 2 weeks, how are you going to do this? So you structure it, right? So this is what we're trying to achieve. So we're going to be able to make money off trading. We don't have minimizing the confusion aspect of it. So you have multiple concepts here, and you go to the chart, you cannot use any of those because you're not mastering any, so in order to make money, you need to master a specific constants and be good at it. It's all about the experience. So how about we now go to TradingView, and I'll show you how I do this in the charts directly, and you have a full understanding on how I approach my days. So I'm going to take an example of price action. So this is Monday. I was involved in this transaction actually in this. And I'll show you what I got. So you'll see we're actually following the trading plan exactly the way that I told you. So So looking at the 4-hour time frame, for example, what we can see happening at this time, so this is that, also give us the indication of the trading's high. So what we have here is the fair value gap, and we push higher from, we broke structure here, so that's the reason of break of structure. I don't count this high probability one because the range here was too big, and then the break of structure is too small. So maybe this is not a valid break of structure, but we can still look for another push to the upside after. What we can see here is what price actually created the fair value gap. Price came to it. Asian low is being around here. We have this wick. So we're going to go to the 15 minutes and mark the daily candle in midnight open levels. So what do we have here? What is this? Other people will say that this is a fair value gap. That's a big mistake. It is not fully filled. So price is going to probably come back to this level. So it's not fully mitigated. And this is a high probability when it hits 50% of the fair value gap. So I'm going to do a video on touching on several different examples of fair value gaps for future reference. So what we have here, we've got FAR levels here, fair value gap here with a high inside. So it's another level. This is a bit too far, but we have this one here that is close. So this is a nice POI. This is a previous 4-hour high. And if we go to daily time frame, because I said you can actually go above or below that. And what we see here is what? We can actually see that we have this high that we mark, but we have a lot of highs here. We got this high, as well as this one and this one here. And those are all low resistant liquidity, which creates liquidity, buy-side liquidity pools. And above it, there's a clear value gap. Look at that. So this is exactly what we're looking for. Maybe the price in the next day, maybe it will continue to actually reprice that FVG. So that's the plan for the day. So this is what we're expecting. So let's go to the time-based level. So back to 15-minute time frame. So what do we see first? Let's mark the Asian range. So I have a problem for this day. The Asian range is, this is weird. A problem here. 20 to midnight. All right. So that's our range. This is the low and this is the high. Midnight open is around here. So midnight open, midnight candle. So that's one here. Put this on another color, blue. Let's just to differentiate, right? So also the same thing for the 17 candle, which is the actually daily opening candle. Well, it's right here. So we are above both, and we have this level here, which is a fair value gap, below both levels. In this case, there's going to be deep discount possibility, and it's a very nice level to look to buy because it's below midnight open, below the daily candle open. Now we're going to play the price action, see what happens, and we see you reach that level, see the Asian low level here, and then the fair value gap is completely induced. And what we have is a complete reprice of the fair value gap and bearish hammer with an engulfing reversed. So we can actually enter based on this three candle pattern, or we can actually enter off the order block. So this is what we have now. Limit order on the order block. So we're targeting the high price action, and we have a 1 to 3 pretty much, very close to lever, and this just goes up, boom. And could have went to the 5-minute time frame here and look for a 5 minutes fair value gap if there was one, but you see we actually started going up to our liquidity level, and this one we missed the trade, but we were in the right direction. Playing the price action more, we are above midnight open, and all the opening of the daily candle, and we are also above the Asian session. So we're skipping the Asian session and we're going up. Let's see if there's any confirmation during London. It's the creation of an order block as well as a fair value gap. So presumably we can enter at 50% of this fair value gap. And this is the old model that I preach on step 1 and 2, and we got triggered there. We got boom, and we got pushed out because there's the point of interest that we previously mapped, and it was more interesting. So this was not aligned with a high probability for our level. So we might get some reaction of it, but it's not going to be the best reaction. However, this one here is the level that I was engaging for. See what happened. Same confirmation here, creation of a fair value gap, market structure ship, and And what we can do here is, because this one is very small, I think price will disrespect it, but like, what we're to enter from, we got this last bullish candle before price dropping. It's aligning with the fair value gap. That's an entry, and it's valid. We just the opposite actually. There we go. A short, not high, and then targeting the other liquidity level. It will be, it's an important low as well as the London low, and that's another trick. Price hitting that entry, and then keep going lower. So at this point, you're already taking partials, I hope, and so forth. So if you would take it at 1 to 3, it's more than enough. So you can always avoid those entries here, even though you can add some project, but it's not as good as those ones. So these ones are aligned with the 4 hour. These ones are not. We always want it to be aligned with the 4 hour, because this is where the most expansions will be, and this is where we can actually catch big part of the expansion of the daily candle. So that's pretty much it. Just a quick one, so you can route through a structured approach to actually trade. And I hope you guys have fun with it. All right, super hugs, guys. Wish you the best.